Hey everyone, welcome back to Chipstock Investor. Today we have a biotech company, Twist Bioscience. And we want to thank our community member, Barb, for pointing this company out to us. We'll show you what we've got for our research. Before we get started, though, we had another community member, Shannon, remind us of some of the other great comments we got over the last 2 years. And one in particular stood out to him as particularly awesome. What was that, Nick?
Before this luxurious beard, someone said that I looked like Herman Munster. I don't know, find an old video predating 2024, and I'll let you be the judge of that. I don't know.
Great comments.
We had fun with it.
We liked it. Thanks a lot, guys.
Enough of that. What are we actually talking about today? We put together this handy little slide for you so you can see what to expect. DNA on a chip. Why? This is where Kasey did some legwork for us on Twist Biosciences. This is not so much maybe a major talking point, but Kasey is developing a bit of a healthcare investment framework. Now, this is particularly from the standpoint of the United States and the very messy healthcare system that exists here. Research dollars versus actual insurance dollars. If you're looking for a company that you think can blow up and become the next big thing, become a 10x or a 100x stock or whatever, you want insurance money, not research money. Not to say research isn't important, but that's just the truth of the matter. And then why silicon is where it's at for investors. This is Chipstock Investor. There's a reason why we took a look at Twist Biosciences. And we've taken a couple looks at these, like Kasey did some work for us last year on Quantum Psi, ticker symbol QSI. We made a bearish call on that, and that stock indeed did not do so well since then. So are we about to do it again? Hopefully not. We're not hoping for that outcome if you're a Twist Biosciences shareholder. But let's maybe talk about this here, and we'll let you know what we're thinking and where there maybe is a good place to invest if you're really bullish on development of drug discovery and research in biology.
Just a quick primer on what DNA is and why this is an important aspect of the research and development of all sorts of things, not just pharmaceuticals, but all kinds of things, because DNA, or deoxyribonucleic acid, is the molecule that carries genetic information for the development and functioning of an organism. That's the definition made by the National Human Genome Research Institute. To make this a very simple illustration, DNA is the blueprint for all life. DNA acts as that instruction manual, not the IKEA kind, of course, but it's much more detailed than that. DNA makes us, who we are, and all of the living things around us in the world. And since we're at Chipstock Investor, we'll say DNA is nature's embedded memory that contains hardware operation instructions.
Okay, so what does Twist Biosciences do then?
Take a look at their corporate profile taken from their website. Twist Bioscience provides DNA synthesis platforms to industrialize the engineering of biology. And the core of this platform is that DNA written on silicon wafers. Twist products actually go on to help researchers develop treatments for disease, discover new drugs, create more sustainable crops, and they're even working on DNA as data storage. Twist's tech actually works as like a little puzzle piece maker. Researchers looking for that exact puzzle piece that fits into this puzzle that they're trying to solve. This DNA that Twist provides helps solve those problems.
And the reason why Twist needs to exist within this context is like a puzzle piece. Maybe you like grab lots of puzzle pieces and you try to fit them into the puzzle and they don't fit. It's time consuming. So Twist's platform helps with that time commitment, reduce the amount of research time needed, helps reduce the expense, helps with scaling issues because DNA is a very large data set, a very large library of DNA sequences. It's just not humanly possible to just constantly do trial and error. So this is obviously, it sounds very extensible. It should address the entire pharmaceutical and biotech industry, maybe healthcare in general. which in the US is worth several $trillions a year in spending. Kasey, this sounds like it should be insurance money. Is it really? How big is this market that Twist addresses?
Based on our research, we think that the synthetic biology is worth in the ballpark of around $15 to $20 billion a year in industry revenue. The number is such a wide range because there's a lot of things that fit into this synthetic biology based on various metrics, but we think it's around 15 to 20 billion and is probably growing at around a double-digit CAGR. Synthetic DNA is a subset of that. And so that small subset probably makes up anywhere from 3.5 to 5 billion, plus or minus a billion. Big range, but a small part of the market, really.
Okay, interesting.
This episode is sponsored by public.com. Heads up, everybody, time may be running out to lock in a 6.9% yield at public.com.
Right now, bond yields are at their highest levels since 2009, and you can take advantage with a bond account. But here's the thing. The Fed has signaled potential rate cuts in September.
And there probably will be more to come this year and into 2025. The good news is with a bond account, you can potentially lock in that 6.9% yield until 2028.
And then when the Fed does lower interest rates, your yield actually remains the same. It's locked in. But you must act fast to take advantage of some of those highest bond yields in years.
Discover how you can lock in a 6.9% yield until 2028. The new bond account only at public.com. Check it out now at public.com/CSI.
So this is always where I get interested in looking first whenever we talk about really cool, fast growing technology. Who are the competitors? Because that will dictate how much of this market a company like Twist is, able to capture. And this is, I think, where we run into the first issue. You look at Twist, possibly a few $billion a year in spending that they can address, but they're only capturing a few $100 million per year in actual revenue. And it's because there is a lot of competition. There's a lot of big established companies and big pharma and big biotech, companies like Merck, Thermo Fisher, Danaher, Agilent, also a lot of other fellow startups as well. So this is not a slam dunk. Twist is not exactly free and clear pioneering this industry all by itself, right?
Yeah, I put just a very small sampling of competition for Twist on this slide. Most of these are some of the smaller players, but as you see, Merck and Thermo Fisher, very big healthcare giants, are also in this DNA synthesis game. What Twist does have going for it, though, is it's a niche play. These larger companies, of course, are much more diverse, but that might not exactly be the best thing when it comes to profitability. But there are also a lot of smaller players in this DNA synthesis space, not just Twist.
Good stuff. Folks, Kasey put together a longer, more extensive list of risks for Twist Biosciences that you can find in our show notes. Check those out. Part of the Semiconductor Insider, just $5 a month, gets you access to all of our show notes. She pulled those from the annual report. But let's maybe go back to this part about their DNA synthesis platform being built on silicon, on chips. So historically, apparently, I'm not a researcher. I don't work with DNA, and I never have in my career. But apparently, historically, there's a couple of established processes for synthesizing DNA on these different plates with little wells in them, or there's a microarray that doesn't allow for a lot of information to be stored. And so Twist said, hey, can we use semiconductor technology? You can cram a ton of information into a memory chip or something similar. And so that is what they went out and did. You can see the very, very large exponential increase in the amount of information that can be stored on these silicon plates, which are a bit larger, apparently, than a large smartphone. So here's some generic pictures provided by Twist on what these silicon plates look like. There's these very tiny clusters on the chip, and each of those contains 121 programmable devices. Optical image of what that looks like on the right. So they use some metrology equipment, maybe from like KLA cord, to take a picture of that. And as I was reading this research that Kasey pulled up, I was struggling to try to figure out, okay, who can do this? Because Twist obviously is a bit tight-lipped about who is handling the manufacturing of these semiconductor devices for them. Obviously, they would want to play their hand a bit close to their chest, but it sounded like a partner would be needed that has expertise in data processing, MEMS, micro electromechanical devices, analog sensors, also probably an in-house manufacturing service as well, because they said that Twist says that there's a single provider that's helping with the design and the manufacturing. So that means it's an IDM. And I'm pretty sure that it's maybe Analog Devices that's helping with this, ticker symbol ADI. And there's some other research that ADI has made available publicly that makes us think this is probably the case. It sounds like they're working with a lot of customers that are developing some sort of DNA synthesis, some sort of virtual biology platform using their chips. One startup that has actually gone public with this is Evanetics. Some more pictures here of what that looks like. You can see some similarities with the pictures that Twist provided as well. Whether it's actually Analog Devices or not, we're not going to be dogmatic about that. We can't say for sure, but we will come back to this and why we think it's important later on.
Before we dive into the actual financials of Twist Bioscience, let's take a look at where their revenue is coming from. On the first slide, you can see that NGS, or next generation sequencing toolkits, are the biggest revenue driver, with over 50% of the revenue coming from just this product. And then as far as the revenue by industry, you can see that healthcare makes up the biggest industry purchaser, with industry chemicals and academia following that, with a few of the sales going to the agricultural business.
And maybe just before we continue with a deeper look into the financials, Kasey, I do have a question for you that relates back to one of our key points. These sales that Twist is making to various industries, are these research dollars, R&D dollars, or is it insurance dollars that they're capturing?
I would say that this is primarily going to research and development. Even in the healthcare industry, this is not directly coming from a sale of a product.
Okay. Well, I guess maybe that's another important point to keep note of, especially when you're looking at a company based in the United States operating within the healthcare sector. If you're looking for a company that has the potential to become a really, really big winner, almost all of the top companies, if not all of the top companies, make most of their money by going through the insurance companies, the gatekeepers to the multi-trillion-dollar per year sector, or getting some sort of really, really significant kickback from the government, which also ultimately kind of goes back to the insurance dollars. Probably a different discussion for another time, but I just thought that was an important question to bring up one last time.
Mm-hmm. And thinking out loud about that, there is obviously some government subsidies involved in this because it is research and development. But when you think about what will happen with budget cuts, sometimes research and development is the first to go.
Especially if you have lots of competition also working on similar R&D initiatives.
Exactly.
Okay. Well, this isn't really a bad company. That's not what we're saying. Obviously, strong revenue growth, growing north of 20% per year in sales. That's really good to see. Headed towards $500 million per year in total revenue. So this is not a small business. Obviously, it is scalable to some extent.
Yeah, you can see the expansion in biopharma growing at a little bit of a clip over the last few years. No doubt the COVID-19 pandemic had something to do with that when developing a vaccine for the COVID-19 virus. And then NGS and synthetic bio making up the other two portions of that. But strong quarterly revenue growth and order growth for Twist.
Okay, but here's where we get into some more problems, especially if you're thinking about a sustainable growth story. So revenue growth aside, that's in green. You can see the company has a long track record now, IPO in 2018, but even in the last few years where got like that extra boost from the pandemic, still operating on a negative free cash flow basis and negative GAAP net income, especially a GAAP net income negative because of a lot of employee stock-based compensation. Free cash flow, I would say one positive thing here is they are homing in on break even in the last quarter, Q2 2024, just negative 7 million. So that's a positive. That's a really positive thing if that trend continues. However, the balance sheet has dwindled down again. So again, they had the IPO in 2018, got a bunch of cash, but by early 2022, they had to do a secondary offering of more stock. That's why you see that big jump in cash on balance there in the March 2022 quarter. That has continued to dwindle down again because of the negative free cash flow, the losses that they've been incurring. Are they going to need to do that again? Another secondary offering where they sell stock and dilute existing shareholders? Maybe, maybe not. If they can get free cash flow to break even, maybe the balance sheet is in good shape as is.
So, what does all that mean? All of that research that we've just provided to you. Let's make some assumptions and some conclusions on our research on Twist Bioscience. For us personally, we find that it's too small a market with too many competitors. That's a great thing for healthcare consumers. We really appreciate that there are some competitors out there, especially to the big behemoths like Merck and Thermo Fisher. However, for an investor, that may present some problems long term. There's lots of innovation taking place also in this space. You can think about the NVIDIA synthetic data and computing power coming from massive pharma, biotech, and life science industries. We certainly think this could augment the healthcare industry and propel it forward in research and development, but may pose some risks to a small company like Twist.
And then from a financial point of view, there doesn't appear to be any real clear-cut path to profitability, and just the revenue scaling issues because these are not insurance dollars that Twist is addressing. Yeah, I guess that goes back to being too small of a market and, how profitable can this business really get? So this is where I think maybe we want to circle back to ADI, analog devices. Is that actually the best investment when looking at a company like this? We did the research, we ran this through the framework, and then, kind of what we latched onto here was the semiconductor technology that is actually making it all possible in the first place.
Of course we did.
So what does ADI do? Well, it's an IDM. So they design and manufacture chips. So they actually do a lot of stuff. They're one of the leaders in the IDM space, one of the leaders in data processing, turning analog signals into digital signals. They can actually be used by a computer. So taking the real world signal, making it usable by something, for example, like an NVIDIA AI accelerator. Lots of work in consumer products as well. Playing guitar, electric guitar, especially when I was a kid. I had an analog effects pedal collection, still have a lot of those. He rips a lot of those open, and analog devices are inside of that. Cloud and enterprise, auto and industrial. A lot of these markets are in a downturn, perhaps getting back to the start of a new growth cycle. And the beauty of a company like ADI is, despite these cyclical ups and downs, they've been able to grow throughout that. You can see the 16% CAGR for the stock price itself, plus dividends not included in this stock chart. And actually, if you take this chart all the way back to like the early 90s, 1990, that stock price CAGR of 15 to 16% actually holds, including the dot-com bubble. Pretty impressive run. So how has ADI been able to pull this off?
Even though you see some cyclicality over the years in revenue, Analog Devices has had that great steady free cash flow. Obviously, a very disciplined company through the years.
Mm-hmm. Yeah, that's right. They do exactly what you kind of would want them to do as an investment. They accumulate cash in good years. And then when maybe things are not so good, maybe investors are jittery, the industry's a little bit nervous, ADI goes shopping. They're also pretty disciplined in that they're not afraid to walk away from business that no longer fits within their business model, or maybe they don't see a good path to good return on investment. We've talked about Indie Semiconductor as of late. Some of the acquisitions that Indie made was from Analog Devices. It always makes you kind of wonder if a big industry behemoth sees no good return on investment for some part of its tech portfolio and they're willing to part ways with it. I just, I don't know. I think ADI knows what it's doing. If there was a good return on investment, they'd keep it. At any rate, disciplined company, they have a really good proven track record of delivering profitable growth. And of course, 15-16% annual CAGR plus dividends. This is no NVIDIA or AMD or some hot semiconductor stock that you might think can double again in the next couple of years. It's probably not going to do that. But if you don't like high teens CAGR returns from your investments, I really don't know what else to say.
There's no help for you.
There is actually.
Oh, yeah.
That's why we have this channel.
Oh, right.
It's a fantastic long-term return.
So there you have it. There's our take on Twist Bioscience and a little bonus ADI analog devices coverage as well. Make sure you check out our sponsor, public.com. Link is in the description below, public.com/CSI. And as Nick mentioned previously, as a semiconductor insider, you get an expanded research analysis on Twist Bioscience. Link is in the description below. Just $5 a month gets you access. See you all again very soon at Chipstock Investor.